This is Matt Dimitrish of Telemus Capital with the week in review for the week ending December 4th of 2020. It was another positive week for stocks. Each of the major U.S. equity indexes set all-time highs last week. The Nasdaq Composite claimed the top spot, gaining 2.1%, with the S&P 500 up 1.7% and the Dow Jones Industrial Average up 1%. 9 of the 11 sectors within the S&P 500 contributed to the advance. The energy sector continued to lead the pack, up 4.5%, followed by both healthcare and technology stocks, which rose 2.8%. Utilities were down 2.2%, the weakest by a wide margin. There was no specific catalyst that propelled stocks higher. A bullish investor mindset seemed to be climbing a wall of worry. A key economic development was a group of Republican and Democratic lawmakers that agreed on a $908 billion stimulus bill. Friday's employment report was downbeat as there were notably fewer job gains. A lower level of labor participation resulted in lower unemployment rate. While this data was disappointing, the market reacted as if it had an influence on stimulus negotiations. In company news, Salesforce agreed to acquire Slack for $28 billion. Salesforce shares fell by 9% on the week on concerns of the hefty price tag paid for Slack. In the bond market, the 10-year Treasury yield finished 13 basis points higher at a yield of 0.97%. This led to a steepening of the yield curve, which now has the greatest spread between 2-year and 10-year Treasuries since late 2017. In other markets, the dollar weakened by 1%, with the dollar now at its lowest level since April of 2018. Crude oil rose by 2% to close just above $46 a barrel. Lastly, gold climbed nearly 3% on the week to finish just above $1,800 a troy ounce. That concludes the week in review for the week ending December 4th of 2020. Stay safe and enjoy your week.